The tax code is public. There are no secrets in the tax code. How do you know if you're dealing with a bad agent?
If someone's flipping that and saying you need insurance before ever understanding those things, well, they're not actually really looking at what's in your best interest.
You make $600,000 a year. $1 million that barely covers 2 years worth of income if, God forbid, something happened to you. Right now is the most you're ever going to need the term life insurance because you have the most years ahead of you that you need to protect against. Welcome to today's episode of Beyond the First Million. I'm your host, Gideon Drucker, alongside my much taller colleague, Jordan Haines. And today we're going to be speaking about life insurance.
Yay.
Which means we can pretty much say whatever we want the rest of this episode because everyone has already turned off and moved on to other things. We get it. Nobody wants to talk about life insurance, except really life insurance people, and we will get to those people a little bit later in this episode. It's not about making money and growth and the stock market and retiring early and education and all the wonderful things that we want to plan for. It's about death. It's about what happens if the absolute worst thing in your life, in your family's life, happens. But for that exact same reason, right, that nobody actually wants to talk about it, is that it's probably the most neglected area of people's finances that we work with. It's the biggest thing. They have a gap that they've never thought about, they've never addressed, and it's a pretty big one. And so that's why we're going to talk about today. We have feedback that we should be smiling more, right? When you're on camera, you should be smiling a lot more than you think you need to. And it would be an interesting episode for us to take that to heart in this particular episode where we're
smiling the whole time,
smiling like crazy people while talking about what happens if you lose your spouse and you need life insurance. So hopefully that doesn't come across in the episode. But if that happens, now you know why. But I bring up life insurance. We're about to get into it. What immediately comes across your mind?
Well, first I need to say, like anyone who's recorded anything, you take a few takes, right? You try a few times before you get it right. And Gideon wrote right before this take, need to smile more. We just wanted you to comment on it. Insurance is it's always an interesting conversation to have with people. The way I often frame it when I talk to clients is like the worst thing that could happen, the things that would have the greatest impact on your financial success in the future is dying, becoming disabled, or getting sued, right? Like those are going to be the things that have the biggest impact. But they might not be the most frequent things or the most like front and center. Like I booked a trip the other day, and like anytime you book a trip or rent a car, there's always the like little insurance thing, right? Constantly. Those are the types of things we insure a lot, right? We insure our phones, we insure our pets. We insure so many things, but for some reason, when it comes to actually insuring our life
and our income,
right? And sometimes it's just like, no one wants to talk about it. So we don't do anything about it, but it feels so like ambiguous. Like it probably won't happen.
We're going to dive into the mechanics of how life insurance works. We're doing this one time. You're going to stay with us. You're going to enjoy this episode and make sure you take it to heart. And then in future episodes, we will move back to more interesting, exciting, right, ways of building growth, of playing good offense.
Yeah.
So at its baseline level, what is life insurance? Baseline, it's pretty simple. It's death benefit protection. It's if you pass away, your beneficiaries, most likely your family, your spouse, your kids, get a payout. Let's say you have a $2 million policy. God forbid you pass away, your family is getting $2 million tax-free. At its core, that's what life insurance is. And there are different types. We're going to start with the one we utilize the most that is the better fit for most people, term insurance. It is the type you rent, that you say, hey, you're married, 3 kids, you get a 10, a 20, or a 30-year policy. If God forbid something happened to me over this 20-year period, and I have $5 million of death benefit, my family gets $5 million of coverage. It is typically super inexpensive to get that type of coverage because you're renting it. There's no savings component, and if you outlive the coverage, you don't have any more insurance, right? So we like thinking about term insurance is it's protecting not for when you die, but if you die. If you pass away prematurely, term insurance is going to protect you. Who needs term insurance? Young families, right? You have a mortgage, you have kids that you want to hopefully take care of and send to college one day. It's for protecting the worst case scenario in the short term, right? So a lot of our clients fit this description exactly, right? If you're 42 years old, you make $500,000, you have 2 kids, you need to make sure, God forbid something happens tomorrow or next year, you have enough income coming in via the death benefit payout that can take care of your family for the next 20 to 30 years.
Can I ask you a question?
Yeah.
I can hear some people in our audience thinking, but I'm single. I don't have any dependents. And I just heard a lot of examples of like, you have people depending on you. What if I'm single, no dependents, not really anyone relying on me? How would I think about life insurance?
Yeah, it's a good question. If somebody would suffer economically because you pass away, that is just like the giant red flag. You need life insurance.
Yeah.
if you're young and healthy and you want a family, one day, you plan on at some point in your life, people will economically depend on you. And by the way, that doesn't just have to mean being married or kids. That could be older family members, right? We have some clients that might be 35. They make more money than their parents ever did. And they're actually becoming more and more financially responsible for older family members. So it can work in both directions. But even then, term insurance is typically so inexpensive, and it's based on your age and health. So the younger you are, the healthier you are, the less expensive it is to get the insurance, right? And if you just think about why, because the insurance companies, the less chance they would have to pay out, right? So it's a lower premium to actually get it. There are some clients that have asked, hey, should I have life insurance? They're 35 and single. And we say, hey, getting a 20, 30-year inexpensive policy, it's $1,000 a year. You can get now, lock it in, and not have to worry about it 5 years from now, 10 years from now, when you do get married, you do have kids. I don't think that's the worst thing in the world. And again, for our clients, you're making $300,000, $500,000, $700,000, locking in 30 years of coverage for $1,000 or $2,000 a year kind of makes sense. Do you need it at that point? No. But I think it's just a good, weighing the cost benefit.
Yeah. Low cost, high benefit, might as well is kind of.
Yeah, exactly. For term insurance.
Sure.
And again, I'm making that distinction, and we'll come back to the permanent insurance side of it. That's really how we think about it. We'll get into the exact numbers and how we map out how much you should really have. But if you think about 40-year-old family, they need the most amount of term life insurance they're ever going to need right now, right? And each year, if you think about it, that need gets a little bit lower, hopefully. Why? Because right now, you're at your lowest net worth you're ever going to have, right? If you think about every year, you're saving, you're investing, you're compounding your wealth. So you have the lowest net worth you're ever going to have. Your kids, your family is the youngest they're ever going to be. So you have more years of taking care of, but also you have the most years ahead of you that you need to replace your income if something were to happen, right? So if you knew at 45 that you were going to be able to make it through your working years, well, now you're basically self-insuring yourself. You're getting to a point where you're building up your net worth, where it has grown enough and you don't have working years you would need to make up for.
Gotcha.
But right now, whether you're 30, 40, 50, right now is the most you're ever going to need the term life insurance because you have the most years ahead of you that you need to protect against. But if we think about what is the point of life insurance, how does it actually work? Let's say you got a $2 million policy, right? And God forbid something happens, your spouse gets the $2 million policy and comes to us and says, hey, I need to make this money last. I need to invest it. What should I do? The way we would think about that $2 million payout, which is tax-free, is say, hey, we need to start generating income to replace your spouse's lost income, right, that they're not earning anymore. So let's say $2 million, you were able to earn 4% in income, in yield, without touching the actual principal, without touching the $2 million itself. That would throw out 4%, $2 million, about $80,000 a year. So you're basically turning that $2 million death benefit into $80,000 to take up your living expenses, right? To make up for the income that's not coming in anymore. Why do we try to leave the principal alone, that $2 million? Because we still need to pay for the big things that are coming down the road. You need to pay off your mortgage. You need to make sure that education is taken care of for your kids. Health costs that come up, just big planning goals. You want that money for the bigger ticket things and use the income, the yield that's coming out of that death benefit payout to replace your income.
When we work with a client, right, we build a financial plan, which is very much just like a roadmap for the future, right? How do we get to where you want to go? And in my mind, life insurance is meant to say, hey, we want to continue getting there without disrupting your plan all that much.
Exactly.
Yeah.
Because if this is one of those things, if you don't have the amount of term insurance and God forbid something, the worst thing that can happen happens. Mm-hmm. But if you have $3 million, $5 million, that allows you're emotionally devastated, everything that comes with the worst thing happening. But financially, you can say, hey, we are still on track to pay for education, for retirement, for health costs, all these things that come up in the least financially disruptive way possible.
Yeah.
And the other part, and I think sometimes people miss this, even when we start going into the insurance conversation, is it's not just that you need to take the income you can generate from the payout to replace your living expenses. It's that if something didn't happen, not only are you have your living expenses, but you're saving something 20 to 30% of your income each year.
Yeah.
Something happens and your household income, right, goes from 600,000 to now one spouse's. You have no capacity to save into your 401ks, your investment accounts. We were banking on that, right, in your plan of 20, 30 years of saving, of investing, of growing for the future, right? So it's taking care of both sides of the ledger. You can tell, like, listening, I am passionate about term life insurance. For all the reasons that we spoke about, we've heard clients come to us and say, hey, well, I have that $1 million policy through work. I'll probably be fine.
Yeah.
And in the back of my head, I'm thinking, you make $600,000 a year. $1 million that barely covers 2 years worth of income if God forbid something happened to you. And even when we do planning, right, and we talk about probabilities of success, if we were just planning for what's most likely to happen, or like the 50% to the best case scenario version of things, most people wouldn't really need a planner.
No.
Right? If we just knew that markets were just going to go straight up, your income was going to go straight up, there were going to be no negative changes, things you have to deal with at any point over the next 30 years, most of the clients we work with would be in pretty good shape.
Yeah.
It's because we are trying to figure out, and you said it at the beginning, the higher your wealth goes, the bigger you want to protect against the calamitous things that could go wrong. How do you protect against those things that can destroy everything else that you've spent 10, 20, 30 years building? Permanent insurance is the type of insurance that you own, you don't rent. That it typically, there's a savings component that comes along with the death benefit protection. And it's a lot more expensive because there is that savings component and because you have it as long as you pay the premiums for the rest of your life, right? So if you live until you're 70, 80, 100, you have that life insurance provided that you're paying each year. So it's a lot more expensive. We'll talk about use cases, but before we even get there, and again, most of the time, 95% of the time, term insurance makes the most sense for the most people.
Yeah.
Most of what we do is dealing in protecting against worst case scenario. But the starting point to the insurance conversation is not what type of insurance, what company, it's none of that. It's how much death benefit protection do I and my spouse need? If I'm single, do my older family members that are depending on me? Is it $1 million? Is it $3 million? Is it $10 million? And then you figure out the most cost-effective way of getting there, right? So if somebody needs like most of our clients need $5 million of death benefit, they tried to solve that with permanent insurance. That would cost an arm and a leg. It would make no sense. It wouldn't make sense for cash flow. It would disrupt their investment and growth plan. It just wouldn't fit what they're trying to do. And that's the reason then we move, all right, well, now let's talk about how much term insurance, because we are trying to solve this big need for the lowest possible cost.
Yeah. Makes me think, if those listening to this go back and listen to our episode where we talked about simplifying, right? And the whole premise of that conversation was you have a strategy, you know what everything is doing for you. And insurance in particular is one of those things that we find that like a client will have it and they'll be like, I don't know why I have all these riders or these things that are going on. When really the thing that they actually needed it for was, I need to actually insure myself in case something bad were to happen to me.
Most people that come to us that do have permanent insurance policies can not explain. They got it 5 years ago, 7 years ago, almost to a person. Yeah, I was sold this, right? Like not that they're not trying to take responsibility, but it's a very clear and transparent. Somebody sold me this policy. It sounded good at the time. I have absolutely no idea why I have it. Sometimes it does make sense. Sometimes it doesn't. But my biggest annoyance with the person who did that when these people have it is they have this permanent insurance policy that they didn't really need, but they don't have term insurance. Right. So an insurance agent looked at them and said, this is really the best thing that you could have. $3 million, $5 million of term insurance. We're going to ignore that entirely. And here's $400,000 of permanent insurance that has a savings component and sure, we'll do all these other things, allegedly. So not only did they sell you the thing you don't really need, they didn't get you the thing that you actually have. That's not an accident. But most permanent insurance pays better to life insurance agents. Client is putting more money towards it, so you get a larger commission. Term insurance, nobody could really run a life insurance business only doing term insurance.
Right.
And as a result, in both directions, the agent, advisor, and the client both kind of get to this point where they don't really want to talk about term insurance.
And that's not to say that like all agents are bad, right?
Of course. We've worked in the past, insurance agents that do an incredible job. But everybody should just know, hey, well, term insurance isn't being spoken about. Here's what's going on.
Yeah.
Now, how do you know if you're dealing with a bad agent? If they use the language, and I'm smiling because I've seen this on LinkedIn, it's be your own bank, right? Do what the rich people do. Rich person's Roth IRA, anything that is a tax-free secret.
Yeah.
Across any domain, insurance, real estate, anything that is a tax secret. The tax code is public. There are no secrets in the tax code. There are ways of strategizing and doing things a little bit better. But if anyone is trying to use language where they're obfuscating so much about the thing that they're actually talking about, if they need to come up with 9 other examples of what the thing is they're actually doing for you, I would go in a different direction, run for the hills.
Yeah.
If somebody's bringing up permanent life insurance really early in a conversation, that is a good sign that you're speaking to a life insurance agent, that not a financial planner that is trying to solve a need.
Yeah.
Right? If you're talking about that before cash flow and education funding and retirement projections and how much actual coverage you need, and it's just, well, this is a great way to save for retirement and have life insurance, you're going in the wrong direction. And part of that second is if you're speaking to somebody that is only licensed to sell and deal with life insurance. You could be licensed to sell life insurance and call yourself a financial advisor. Anybody can call themselves a financial advisor. It's not a designation. It's not a license. You might think, oh, well, they can also manage investments and they can do financial planning. Those are different designations. It's the only thing a person can do is sell you life insurance. They are legally not allowed to talk about investments or planning. Guess what they're going to bring to you? Right? What is the only thing that they can address that they can solve for?
Insurance.
Insurance.
As you're talking, I'm thinking, in my experience working with people, talking about life insurance isn't the funnest topic, right? That's how we started this episode. And oftentimes we don't talk about it until after we've done a lot of the initial work of like, how much do you actually need? We can't determine how much actual life insurance you need until we know what's important to you, what are your goals, your cash flow, your income, what's your future look like a little bit. Only once we understand that, then we can say, this is actually how much we think you should apply for. If someone's flipping that and saying you need insurance before ever understanding those things, well, they're not actually really looking at what's in your best interest.
Especially if they're talking about the permanent type, because we can look at a client and we typically don't talk about it until 2 to 3 months in. It's really the last thing we do as part of that initial plan. But term insurance, you can look and say, hey, you need X amount of coverage. It'll cost you this.
Right.
It's a very binary conversation, decision.
And I'm sure you'll get at this too. Permanent insurance exists for a reason, right? Like it solves its own problem. I think what you're saying is that for the vast majority of people who are building wealth, want to protect against their life, term insurance just makes a lot of sense for them.
But I would say there are really like 3 use cases of when permanent insurance makes sense. All of them involve understanding you are buying life insurance. Permanent insurance makes sense when you have an economic need and you want coverage for the rest of your life. So what's the first example? Somebody that's really motivated by legacy planning. We have a client we just worked with. On every meeting, one of the spouses mentioned that they really want to take care of their kids no matter when they pass away. She's nervous about the future and what the economy is going to look like down the road. And every meeting she said, hey, no matter when we pass away, I want to make sure I'm leaving something to my kids. As she said, I started with nothing. We kind of built, we would like to make it a little bit easier for our kids and we'd like to leave some money behind. That's really important to us. So we are talking about permanent life insurance. They have 3 kids and we're just, for the moment, we're talking about $3 million of permanent coverage, $1 million each for the kids. And part of it too is they want the freedom to spend down their retirement assets, not worried about, are we leaving anything behind for our kids? My dad hears that a lot from retired clients where, believe it or not, sometimes people get to retirement and they're almost a little nervous to spend down their assets because they're like, well, we've always dreamed of leaving money behind for our children, for our grandkids. Legacy planning is important. And if we spend down all of our money, we're not going to be able to. Buying a permanent life insurance protects against that. It's driven by them, not by us. Like, it's not important to us that you leave a legacy to your kids, to your grandkids. Yeah. It is if that's your goal. The second is leverage. I'll use my dad in this. He's financially independent. We spoke about that. And his viewpoint on insurance has always been, if he can spend $1 today to provide $4 tax-free to his kids and grandkids, why wouldn't he do that? It's leverage. He's turning money today that he's not going to use into a lot more money down the road that can benefit his family, charities, everything he wants to do. So it's almost this weird thing is I think too often permanent insurance is spoken about with people too early that aren't at the level of wealth where it really makes sense. Permanent life insurance typically works best, if it makes sense at all, for higher net worth people. That there is some leverage they are trying to create because they don't need assets and they're trying to set themselves up. Other examples, somebody's 75 and they get their RMDs, right? Once you turn a certain age, 72 and a half, you have to start taking money out of your IRAs. It's basically the government's way of saying, you haven't paid taxes on any of this money yet and we want our take. You've deferred taxes long enough. Some clients will say, hey, well, I don't need this money. And they might say, well, let's use some of these distributions that I'm not going to use to, again, turn $1 today that's taxable into $4 tax-free. And that's the last version of when it makes sense. But if you have an estate tax issue, if you're at a level of wealth that right now it's approaching 30 million. So again, it doesn't affect a lot of people, most people listening to this. But if you're above that level of assets, you could set up a permanent life insurance, set it into a trust. It's called an ILIT, an irrevocable life insurance trust that you are putting the permanent policy into the trust and getting it out of your taxable estate. That is the use case. The takeaway of explaining those 3 use cases is it's pretty specific, right? It is not just you need another asset. It is you are trying to solve leverage, legacy, or estate planning. Other than that, term insurance, load up on it. It's inexpensive. You're protecting your family. And the last point on term insurance I'll make is you can convert term insurance into the permanent type at any point throughout the policy's period. So if you get a 20-year policy, Maybe you want permanent insurance 10 years from now, 15 years from now. Who knows? We don't know what the future holds. You're able to convert it without having to go through additional underwriting. Meaning if maybe you're not healthy enough in 10, 15 years to get the coverage on its own, but because you locked in this inexpensive term coverage, you can get that permanent without worrying about your health later on. So it just gives you flexibility. Yeah. That is another reason term insurance, inexpensive, flexible, you're protecting your family. And then you and we never have to talk about life insurance again. And that's really how we frame it to clients. Hey, we're going to get this $5 million policy. You've done your job. You've protected your family. And we can talk about everything else because we have solved this catastrophic potential loss. And now we get to build the plan in the ways that people like talking about.
Yeah. My big takeaway from this conversation is life insurance is to insure your life. That's the thing it's doing for you. And when you start to conflate that, I think particularly with permanent insurance, it's easy to do this where we start to think, oh, this is actually like my primary wealth building tool or other things. It's a hedge against taxes or things like that. We want you to think about it as life insurance is there to insure your life, right? And there might be other use cases where you want to create a legacy or plan for what happens after you die. But that's the point of life insurance.
Exactly. There are just a lot of life insurance agents. It's the Wild West out there. What they can talk about with IULs and it's no market, it's craziness what's out there. So this whole episode is meant to protect against that type of permanent insurance conversation. That's absolutely ridiculous. I don't want to even tell people of like what I'm talking about because then the algorithm, like you're going to get nothing but that, which is basically what my feed is. And just nobody's ever won an argument on social media. So I refrain from engaging. But you're listening to this, I'm doing that for you. So that's all we got on the life insurance front. We hope you, I don't know if enjoyed is the right word, learned something, felt educated, and can have this conversation in a better way moving forward. So with that, we'll see you next week and have a wonderful rest of your week.